If you missed buying the dip in April and are wondering when the next opportunity will come, then get ready because momentum is stalling, volumes are thinning, and all the signs are pointing to an overdue pullback on the ASX. But knowing what to buy and more importantly, when will be the key during this next imminent correction. So tonight, we get on the front foot and uncover 10 ASX blue chip stocks that are ready to buy on the next dip. Now, if you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian Stock Market Show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Dale Gillum, and joining me is Wealth Within's professional trader Janine Cox, alongside Wealth Within graduate and Blueberry Markets Head of Premium Sales, Zoran Kreshevich. Good evening, team. How are you?
Fantastic.
I'm not going to talk to you tonight for a moment.
I know, I knew you were going to leave me out of this one.
No, I haven't been on the show with Zoran ever. So this is the first time we've been on the show.
Is this our first time?
It is our first time. They wouldn't let me have it on to you. So welcome to the show.
Thank you. Thanks for having me.
I'll make it easy for you tonight. Hello, Janine.
I'm wearing red.
You're wearing red and wearing blue. Zoran and I are twinsies tonight anyway. Okay, well, let's get straight into it. The All Ords is showing signs of slowing down, but are we looking at a correction on the horizon or something bigger? Now I'm going to go to you, Janine.
I know you want me to say the C word, don't you?
Yep.
Yep. Are we going to have that correction?
We haven't been allowed to say the R word either.
No, that's true. We think at the moment that we're due for that correction, don't we?
A pullback or a correction.
Yeah, it's uncertain.
So
however, either we welcome.
Well, can you, for all our people who are more beginners, what's the difference between a pullback, a correction and a crash?
Sure. A pullback is more or less around 5 to sort of around 8 or 9%, and that's pretty normal for our market. Yep. Sometimes it could be a little bit more if there's higher volatility, but also expect that we're going to see something in the order of sort of around 15 to 20% for a correction.
Yep.
And a crash, well, forget about it. You don't even need to know what the number is because it'll just keep going.
Yeah, well, it's something over, well, I mean, it used to be back in the 90s, it was over 30%. Now they've brought it back down to 25%.
Well, where's the crash? In a normal market, the pullback is what starts it. Correct. And the crash happens at the bottom. But
the key is knowing when. And that's the thing is, I mean, I know we came out the other month when the Trump tariffs were on and we said the market's not going to crash, and it didn't, you know, and it's still not going to do that. But we can get more into that.
Well, it got to 17 point something, didn't it? Right?
Yeah, about 17.8, something like that. But anyway, but how about we bring up a chart of the All Ordinaries Index? Now, do you want to bring that one up, Zoran?
Yeah, I tend to agree with you guys. Like we might get a little bit of a pullback. I mean, looking at the chart specifically, I think it's probably due after a strong rise that we've actually seen from the 7th of April lows. The market is actually somewhat retraced to the upside around 17%. So that's actually a strong run. Also, this is predominantly on monthly chart, but if you do focus on weekly chart, we can actually see week in, week out, market has actually performed quite well, and we are basically just 3% off an all-time high. So, you know, as we've done the course and learned from you guys, you know, they tend to say the markets actually go up in stairs and come down in elevators. So we have actually seen this strong run. It's looking really, really good right now. But I'm of the view that we might get a bit of a pullback, especially going into the month of June and seasonality aspect, as well as with some of macro stuff that are going on across the globe as well.
Do you see, obviously, you know, as you understand, you know, the market goes from low to high to low, and that's what it does. So we're expecting another low to come in. But do you see a change in money flow in the broking industry?
A little bit. Yeah. A little bit. I still see the same things when it comes to a lot of wealth and a lot of big end of the town, right? They tend to understand the market hypothesis a little bit better, and they basically tend to, you know, buy on the dips, whilst with retail money, what we actually see, or traders, whether it's FX markets or whether it's equities, is people actually, there's a lot of scarcity, and they tend to get in when it's already a little bit too late. And we see that, you know, time and time again, and this could be potentially a perfect example where a lot of smart money was actually going in in its lows when, you know, trade tariffs and all the conflict and issues were going on in April, and then a lot of investors and retail money was actually sitting on the sidelines, and now the market is actually retraced. There is a bit of FOMO going on at the moment, and people are actually looking to get in right now, but it could be a great time. I mean, we could continue to go head higher and test the all-time high, but at the same time, it could be a little bit too late because we might get a bit of a pullback, and maybe the smart money is starting to actually use that as a liquidity to get out.
So you're basically saying what the old, not the wives' tale, what is it called, The amateurs buy at the top and the professionals buy at the bottom. So that's basically what you're saying.
Well, yes. Yeah. Not all the time, but if you are looking at probability of an outcome, tend to be the case, yes.
And if it did pull back, and I'm just going to forget that wives' tale crack, and then you just looked straight at me. But let's just have a look at the chart here.
We've only just started and she's having a go at me.
Okay, you can see that what Zoran's got on the chart there's a nice strong line down here. That's actually a really important level of support for our market at the moment. So we could see a bit of a pullback if we do, and this is what you've been talking about, Zoran. If we do get a pullback, we could see a pullback around that order, short term potentially, but we won't know until we actually see it. So hopefully around the order of 5% would be great. And then once it sort of stabilises, a move back through that high would be, a great setup for the next run.
Because, what I'm saying is this is just normal. We know that stocks and markets have 2, 3, 4 or 5 movements in a year from low to high to low.
Yep.
And we've been up for several weeks on nearly 17%, as Zoran said a little bit earlier. So we have to expect some sort of pullback. How big it is the difference between whether it's a correction, a crash, or just a normal pullback.
Yeah.
But how about, obviously the big stocks are the ones that are driving the market. So how about we go and have a look at some stocks right now and bring those up? Because we've got some real ripper stocks. And I know later on we've got an amazing stock that is a huge opportunity right now in one of our questions, our viewer questions.
Yeah,
I can't wait to get to that one, but let's look at these ones first.
Okay, now look, this is a favourite stock. A lot of investors picked this up. And
it's Aristocrat Leisure.
Aristocrat Leisure traded to $80 recently. Now it's pulled back significantly. So this, in terms of long-term patterns, this is a really interesting move for it. 30% fall. We've seen interest rate cuts. Now we know that this industry is obviously impacted by the consumer, and so whatever happens with the consumer is going to cause volatility in the share price, and that is a normal pullback for a stock like this. You can see in the past how it's had a correction prior to the COVID pullback in 2020, and then we saw another deeper one with the overall market. But this is nothing sort of out of the ordinary for a growth, blue chip growth. It's sort of, I think the area is greyed now when we're talking blue chip stocks. So really, as long as it's got a good history of generating earnings and paying potential dividends, then I think they're fine. There are some years where stocks pay lower dividends because their share price is up. But ideally, the blue chip is supposed to be around that market average, that it's paying close to the market average. But, it's really up to you how you want to structure your portfolio and mix that up, even if you do have a portfolio that's based on a blue chip style. I see a good upside for this stock once it gets going, but obviously we've seen a bit of a correction, a bit of sideways consolidation, and we're not out of that, that murky water. Like our market's been going up, this has been doing the opposite. While our market was actually sideways, this was super bullish. So, there could be a relationship there that people need to have a look at. But once it goes through this $70 mark, I think there's a good potential for it to come back up and challenge that all-time high.
What I found, I've spent the last couple of weeks ringing a lot of people who bought my book and have been inquiring about our courses. Sometimes, as you know, over the last 25 plus years, I do that every now and again. And it is interesting, people are still telling me the same things today as what they were 20 years ago, and they're still looking at the wrong stocks like they were 20 odd years ago, and they're still making their portfolios wrong like they were 20 years ago. But it's interesting, and now they've got all these apps and all this information. And I had one guy said to me, he told his son, he was telling his son to buy Commonwealth Bank, and his son's 20 years old and get it as his first stock. Now, Combank's great stock. But I said to him, Combank's at its all-time highs. Why wouldn't you pick a different stock, a better stock for him, and teach him with that? And so they were looking at the course about whether he could do the course and then work with his son.
Pick any other bank.
Pick any other bank, and I know we've got some more banks anyway, but it's interesting to see that people constantly are not looking at what's actually there, or they're trying to pick really small cap stocks and thinking they're going to make the big money on it. But these are the sorts of stocks that you're talking about now. This is where the money's to be made in these stocks when they're coming off like this.
Yeah, if they don't want the big blue chip stocks, they can go for the mid cap stocks. and choose stocks in there that have good volatility, still are not, they're not high risk stocks. But
they're not, but I think people are confusing themselves because they're just looking at so many stocks and then they're just following the herd. And I'm asking people, why did you buy that stock or why are you looking at that?
Well, that was always the way, because people used to spend all their time just actually looking at heaps of stocks instead of actually doing proper analysis on anything.
Let's get back on. Have you got something to say on the stock?
Weekly chart is actually looking really good, and I think it paints actually even a better picture. So I'd be looking, if I was a trader or looking at this stock, I'd be looking at the lows at $54.90 or around $55. I think if the stock can actually hold around these prices and not break this major low, and if you can consolidate around these levels, what Janine said, and start going upwards and perhaps break the high of 69.13, I think there could be good upside. Obviously, it's an interest rate sensitive stock as well, and with RBA looking to basically drop further interest rate cuts until the end of the year, it could actually provide some fundamental backing for this price to actually continue head higher.
Okay.
Agreed.
Would you want to bring up ANZ and talk about that while we're sort of briefly talking about the banks as well?
Sure.
While you're on a roll.
Yeah, thank you, mate. Look, ANZ has come off, obviously, if you're comparing this to the rest of the sector and looking at, in comparison to CBA, then obviously, it's nowhere near its all-time high at the moment, and that could provide a great opportunity, which is what you actually mentioned just previously, Dale and Janine, because what I find people actually go from one extreme to another. They either go, with herd mentality and just buying the stocks that have been performing well over the years, or they go into something super speculative. But obviously, you got to look where the value is. ANZ is looking really, really good at the moment. Might not provide a buy opportunity at the moment, but it looks like there is actually just under 30% until an all-time high. So if this stock was actually to turn around and perhaps maybe break these key levels here, I'll just add that very quickly.
It looks good, doesn't it?
Then, if it breaks $33.15, then it could provide the entry to basically get into the stock and perhaps test the all-time high, which is around $37 level mark.
Yeah, it's around about $37. It's a all-time high. So, but if this thing, one thing I've noticed with some of these stocks, obviously if our market comes down for 1 to 4 weeks, roughly, that's what we're suggesting. I believe that's what we're suggesting. If a stock like this or some of these big stocks hold up and don't fall away, what is that telling you about these stocks?
Yeah, super strong.
Good quality, enough demand in the stock as well, rotation as well in terms of money as well.
We'll see that in July, won't we, when the funds, look at what they're doing.
Yeah. I want to revisit something Zoran said earlier about when he was talking about retail investors and, can we say, the smart money who were buying in earlier. The smart money was buying into the Trump tariff lows, and whereas the retail weren't necessarily doing that. And if the market's going to fall down for the next 1, 2, 3, 4 weeks, the same thing's going to happen because it happens every single time. So mum and dad start worrying about the market. They start selling stocks because they're worried about all of that. But instead of doing that, they should be using this time to look at stocks like this to set themselves up to buy and start buying. So we're actually saying the opposite, aren't we?
Yep, saying get ready.
So don't be fearful about what the market's doing if it does fall away over the next couple of weeks. Get excited like we do and start using what we're talking about and some of the rules we're talking about to enter into some of these stocks. Now, we've just shown ANZ. So do you any more on ANZ before we go to the next one, Janine?
Look, especially when you see that there's upside potential to highs or stocks going into blue sky. So, there are a lot of stocks that will go into blue sky as part of this next run, and that's what's going to be really exciting. It's just a matter of being patient. But you may even be able to get ANZ earlier, if you've got some really good rules on it, than through that high. It's just you've just got to weigh it up as to what your risk tolerance is, which way you go.
Just last point on that as well, on the chart, it looks like a really good momentum line or trend line as well. It looks
up underneath it all.
Yeah, it looks fantastic. So it looks really, really good at the moment. So.
Well, it is trending. It's trending really, really well. It's just in a period where it's just going sideways just a little bit.
And these are the stocks that are going to tell us when there is going to be a correction, and if they're not saying now there's a correction, then why would we worry?
How many people over the last couple of weeks didn't believe me? I go, you're never going to get caught in a correction or a crash just if you follow the rules in my book. If you just follow the rules in that, you'll never get caught in a crash. And people go, no, well, this is written before the crash, and then we updated it after the GFC, and we still prove that you won't get caught in a crash. I mean, you can get that book for free on our website. You just got to pay the shipping. So go to our website, Wealth Within, click on the store. You'll be able to purchase the book for free. You just got to pay the shipping from it. But anyway, next stock.
Yeah, because it doesn't really matter what you're making per annum over the last few years if when the crunch comes, it wipes out all of the last 4 or 5 years.
Yeah, and that's what will happen when the next crash happens. People will lose their money.
Yep. Okay, next one we've got is APA Group, which we have talked about on the show before. Some people have written in about this one, so they'd be pretty happy to see this one up on our list there. But it's just beautiful and orderly, really nice trends, probably over the last... since around 2015, there's been more shorter-term trading opportunities than more medium-term, really. But I think when you've seen it for that amount of time happening, eventually the stock will change and you'll see it come out of all of this. So we've seen the first stage of that happening. Some traders may have already got in based on whatever their rules were at this stage, but there's nothing wrong with waiting for the pullback. There's usually a secondary pullback that occurs. Look what happened after it pulled back into this low here. There was a secondary pullback there. There are some rules that can get you in. But sometimes, waiting for those pullbacks can be a good thing. If you just look down at this low here at the bottom, there were so many tests of that low before it eventually took off. So it's quite good to be patient and wait for that confirmation so that you don't just get whipped in and out through these tests of a low, which can occur. Sometimes when you get a bounce so strongly off these lows, it may not come all the way back to test it, may only come halfway. So that's something we're just watching, waiting to see how far that pullback actually is to determine the strength when it turns around. I'm excited about it.
I really like this stock, right? Not for this now, but you might be able to get into this in the next 4 to 8 weeks, roughly, depending on, as you said, how much it pulls back. But you want to say anything on APA, Zoran, before we move on?
Yeah, really like it as well. I think it's good-looking stock as well. Pretty much what Janine said, if you can retrace around these levels and hold well and start heading above $9 mark, then I think there could be some great opportunity here. And I actually know this stock and I'm very familiar with it because I've traded probably 10, 15 years ago. So yeah, I think psychology or, personality of the stock changed a little bit because it was trending really nicely up until 2015, 16, what you said, Janine. And it's done a lot of sideways movement over the years, but now that it's come off, and if you can actually retrace from these levels, it could be really good, yes.
All right, let's get into another big stock,
All right, now
ASX.
This is the ASX. I mean, if our market's going to be bullish, the ASX has to be bullish because for the market to go into that last phase, that means increased mergers and acquisitions, increased activity on the stock exchange.
Yep.
We're seeing a lot of little companies getting taken over or mergers and acquisitions happen. I've noticed that that's increasing now.
Because why is that important? I want to delve into that. And I know we've had a good relationship with the ASX for a gazillion years. I mean, even my latest book, the head of education of the ASX did the forward for my book, But he told me the ASX doesn't make its money out of brokerage. Out of that, makes most of its money out of mergers and acquisitions. So that's the good sign that you mentioned, I think. And quite often people they think, the market's bullish, so the ASX has got to go up. Not necessarily. It's when they're doing a lot of these corporate actions, that's when the ASX makes its money.
Exactly.
Because it doesn't make it out of just brokerages or little clips on brokerage.
And this is where some of those small tipping sheets can sometimes be quite useful, even though you're not necessarily wanting them for, to be buying stocks from them, but more that you're using it to see how much activity is going on out there.
Okay, so what do you think of ASX anyway? Can we look at the chart?
Look, so far it looks good. We've seen a nice trend, and it hasn't accelerated away with any strength yet. It's quite steady on that move up. We've had a big push out of that low in April when the Trump tariffs came along. But, I can see this stock heading up between $80 and $90 in the near term as part of this current rise.
Good, isn't it?
It's looking really good.
It looks good. I mean, we've got the GFC high over here, which underpins that low. It's come down 3 times, tested that low, or 4 if you count this low. That's a big sign to see that happen. So I just think it's a matter of time and it's being patient.
Mate, I think we're going to keep Zoran on the show and get rid of Phil. What do you reckon? I think he's doing really, really well.
I don't think so.
He just agrees with you all the time. Where Phil just argues with Janine all the time.
I guess similar school of thought, right?
Yeah.
Yep.
So you like ASX?
I do. I really do. I also think that if it can hold just above these levels here, and
Gee, you're tough. You're a tough customer, aren't
probably,
you?
yeah.
Sit it there.
I think if it can hold around these levels, and if it can have an extended breakout out of this sideways move or consolidation, if I can say it that way, then yeah, it could be $80 to $85 stock.
You know what? I actually have to disagree with you about this level. Really, it's just sort of getting under my skin right now.
Why is that?
Because the natural unfolding for stocks, as you know, because you're an expert yourself, is you want to see the stock come back in there. So I actually want it to come back in there, and I think you're going to agree with me, aren't you?
No, I actually don't.
No, I'm with Zoran. I'm going to be with Zoran.
I think it's already done like a lot of sideways consolidation, and it's been actually happening for quite an extensive period of time. So if you have a look at the low in September 2023 all the way up until now, that's we're looking at nearly 18 months of slowly creeping up a more so sideways move, and I think it's actually time for that to actually extend and break out of then doing the course itself. Obviously, the longer in time the horizon of sideways move, the more aggressive breakout can actually happen out of this pattern. So
well, we have to come back to this one down the track, when it's back on the show.
Let's do it. 4 weeks. We've got a couple of big banks now to get into. So do you want to bring up NAB, Zoran?
NAB is also looking quite good at the moment. It's actually, look, NZ is looking really good, but if I'm actually looking at purely the chart component, then I have to say that NAB is probably a little bit more favorable for me, purely on the basis that, the move up was actually nearly tested an all-time high here. And, the April lows were quite chunky. But the stock actually retraced quite aggressively coming back up. So to me, it's demonstrating purely one thing, that obviously buyers are getting in at cheaper prices and they really want to get a good value, because at some point they might have thought that the stock was actually overvalued. On the back of that, I generally think that NAB is looking really good. It's coming back up again. It's got a nice momentum line that's actually hugging the overall trend all the way back from March 2020 COVID lows. So that uptrend is likely to continue, especially if it actually takes an all-time high in February 2025. I'm a really big fan of this stock at the moment. I think it's going to do quite well over the next 6 to 12 months.
I like NAB too.
Yeah.
With the interest rates come off again, okay, is that going to hurt the banks or help them? I know we're going to talk a bit about it a little bit later in the show. Initially,
they're making a profit on that because obviously they don't move straight away. They wait till the end of the month or whenever that is.
Yep.
But their margins are what's important. So we really need to keep an eye on what's going on with banks' margins over coming 12 months at least.
All right, so let's look at the next bank, which is Westpac, I believe we've got.
Yeah, Westpac is actually my favourite at the moment. I like ANZ as well for upside, but Westpac has got plenty of wiggle room, if you like, to that high. So there's about 13.6% above that next resistance level that it's actually proven that it's hit that level. The one difference, I guess, between this one and what we just looked at with NAB is the rate of acceleration has significantly changed for Westpac. Now, we know that with Westpac, we've seen the board reshuffle at NAB. We saw some executives move over to Westpac. So that's been seen as a bit of a boon for Westpac to have those people on board from ex-Goldman Sachs people.
Okay.
So I would expect that Westpac is going to do some great things. We just haven't seen all of it yet, and there's still plenty of upside.
Are they the retail bankers, or are they more business bankers that have moved off? Because I know NAB was big in business banking.
So is CommBank as well.
So is CommBank, but I think
they hold
NAB's
the
bigger
biggest
than Comm in the business banking, I think. From memory, but because that's what keeps them going. But I think if they've moved, and maybe Westpac's trying to get into business banking.
I just saw Goldman Sachs.
You just saw Goldman Sachs, yeah. She's gold, okay? How about we look at another one? Let's look at the next one. Zoran, it's Woolworths, I believe.
Yeah, this one is interesting. So, look, overall, great quality stocks in terms of being a blue chip and paying a really good dividend yield. But my concern with this stock at the moment is that it's actually in a long-term downtrend, and it's been happening for quite extensive period of time now. So it's been going back from 2021. So we're really talking about, 4 years of consecutive lower highs and, lower peaks and lower troughs. And for that trend to change, I'm starting to think there might be some concerns or some issues fundamentally happening within the business itself. So what I would like to actually see is, on weekly chart, it doesn't look too bad. I mean, it's created a low back in March 2025. The stock has actually come back up now quite aggressively. It's done some retracement here. I would like to actually see probably hold around these levels, around $30 level mark, or perhaps maybe a little bit higher up. And then start the next move up, but it's going to take a bit of time actually for this stock to change its trend and momentum at the moment. The volume is actually looking somewhat good. It looks like actually there was quite a bit of buyers coming when the market bottomed out. So maybe the market does think, or investors do think, the stock is actually quite undervalued at the moment, because everyone is talking about fundamentals and high valuations right now within the ASX or globally when it comes to equities. But overall, I think we need to see some consolidation, another leg up, and then it might start providing some good value. But at the moment, it's a long-term downtrend in stock.
I know Coles was sort of the darling for a little while, in terms of obviously its major competitor. And I know there was talk recently that, okay, now we're jumping off Coles, we're going to get onto Woolworths, which may have been why it's starting to move. But obviously, if you look at the chart, it had a big fall down into 2015 over several years. So is it setting itself up is probably the question. And given we're seeing that shifting move of, obviously Coles probably being overvalued. Now they're looking for a different retailer that's possibly a better buy right now. Do you think that's happening with Woolworths, Janine?
Absolutely. And I'm I guess Zoran's sort of not as excited about this one as I am, but I'm really excited about this because over time we've seen that tussle, and we did, you're right, we'll talk about it on the show, was either last week or the week before, about these two stocks, and historically that happens. So there was a stage where Woolies could do no wrong.
Yes.
And it was seen as the golden child of the staples, and then Coles eventually has recovered. They've made some really good decisions, and that's helped them project their share price forward, but it never stays that way.
Yep.
That's one thing about the industry. So if we look at the monthly, we can see that there's just this massive support from that previous sideways move, and the stocks come back within the range of that, which I like. Now, Zoran is right in saying that, yes, when you're in that downtrend, it could come down further. But historically, what sort of pullbacks does this stock experience? And that's quite normal for Woolies to see that based on what we've seen in the past, I think. This is stock, I was just talking to one of the students today about Elliott Wave, and this is an amazing strategy that we teach, and it's just incredible the way that this stock unfolds and how it works with that. And at one stage, it really tricked me, and it really annoyed me, I'd have to say.
Well, if it tricked you, it wouldn't annoy you, yeah.
It really annoyed me, right? But now it's actually coming back into what is considered really normal. And so for me, this is just a simple case of putting a trend line on a chart and just keeping it really simple. That's the way that I'd be looking at Woolies right now.
Can I ask you a question? I'm going to challenge you now.
Good.
Yeah. Would you buy a stock that's falling like a knife, like a falling knife?
Definitely not. Okay. So, we've got to obviously wait for some confirmation, which, this is one of the things that we go through, isn't it, with deciding how many things do you actually need before you want to buy. And, we all do. We've got to stack up those rules and decide, if I tick this box on the monthly chart and I tick this box on the weekly and I've got X, Y, Z happening. And Dale says trend lines are the best things since sliced bread, and it triggers, well, what more do you really want?
Okay. Correct. And I think what you're saying is, yeah, you're right. You don't buy a falling knife, but it's about finding the right rules and buying the stock on those rules. And a lot of people say to me, or been saying to me on the phone, they're going, well, why aren't you just telling us what to buy? And I go, because you still won't make money, because you won't know how to sell it and you won't know where to sell it, how to manage it. So you need to have proper rules around that. So we've got 3 stocks, 3 minutes. Go, Zoran. You're the next one, which is Suncorp. So 4 banks in a row.
Suncorp.
Nearly. Oh, sorry, 3 out of 5.
Well, interesting stock. I'll start off on monthly chart first, and I'll just basically mark this key level here as a level of support. It looks like actually it's done quite well. It's fallen quite a bit but it's somewhat actually holding well at the moment. And if you're having a look at it from most recent highs, it's actually come off around 30%, which is actually quite a bit. The good point is that this stock provided quite a heavy resistance throughout 2015 to 2020, and it looks like actually it's bounced off those levels quite good. Now, focusing on weekly chart, we can actually see there was a gap. So I would assume there was a fundamental news that came in, and the stock hasn't actually done quite well. Now, if you are a technical trader or you believe in technical analysis, then at some point these gaps will need to be actually filled. So I would expect at least price to come back up and test and close the gap around $22 or $23 level mark. I think if you can do that, then in the short interim there could be potential upside on this stock. On the contrary, as we always have to look at the upside and the downside on the stock, any break and test below these lows here around $17.62, they could provide a whole heap of trouble for this stock, and it's probably likely that we could see more downside to come.
I like it at the moment. I think you're spot on with what you're talking about on that stock. And, to me at the moment, that 30-odd% drop has been pretty common across a lot of these stocks that we've been looking at. So this is telling me that we're getting ready to have a big run up with these stocks, because they don't often fall that much and then not turn around and go up. But still a bit too early. Got 2 more stocks to go. Yours the next one, Janine?
Okay, now Woodside this is a bit more sort of risky and might be on the edge of what you would generally put for a blue chip stock. Most people would probably think of this more as a growth stock, but then it's not really growth either. When you look at it, it's paying huge dividends at the moment, and it's stabilising at the moment, we think. But there is a fair amount of risk, obviously, with the stock, and this is probably more an example, I would say, drawing on what Zoran was saying before, where you've seen stocks that are trending down and so consistently like this has, with no real sign of a reversal. And each time it tries to give you an indication it's going to reverse, then it turns and goes back the other way. So we can see in history it tends to consolidate sideways, confirming that the low's in, and it's done this in a much more volatile fashion back here in 2011-12, and then again here in 2016. Now remember, this was when the mining sector turned. Remember, BHP made a massive long-term low during that time. So I'm looking at that and I'm thinking, okay, BHP and Rio are still down. They're obviously not on our list today, but we do talk about them as part of, being in this group. But I would be watching them as well, just to see what's happening with the turns on those stocks, on Woodside at the same time, just to see if we see materials and energy turning together. But this has potential.
Well, it's half price of what it was 2 years ago. So I think, from what I'm reading between the lines, we have to wait for it to find some support and start to move up again.
Well, we said on our show recently when we talked about Woodside and we talked about Santos, which to me Santos is more of the growth story, whereas Woodside's has been more of the dividend play. But when would you buy it for dividends is the question. So it's more stable in terms of its earnings, whereas Santos has got huge growth prospects potentially coming up in the second half and into the next couple of years.
One more stock to go, Zoran, and you can have
stock.
it. How's that? So we're leaving the lucky last for you.
Thank you so much.
All the best for last, one of the two.
Let's have a look at
Depends
this
on what
one.
you talk about. From that point,
Stockland. Yeah, I would pick this stock over Woodside any day of the week, to be honest. I think it's looking really good, actually. I really like this stock so far. I think we've got key levels that's actually broken around the $5 mark. It's a nice round number. I think the momentum line as well is actually looking quite good. So there is a bit of momentum happening on the stock as well. And I think there is a lot further for this stock as well. Unlike the previous stock that we actually looked at, which was trending downwards and sideways for quite some time, it looks like there is potentially next level of resistance. There's clear run here for another, let's say, 25% upside. Now, I'm not saying it will do that. It could potentially come back and retest that $5 mark, and then start turning around and going further up. But if I had to compare between the two, then I would definitely go for a stock like this as well. It looks like it's done all the hard work over the years in terms of moving sideways and trending down, and now it's actually starting to gain momentum and looks like it's attracting a lot of buyers and investors.
I think this would be the stock out of all of these 10. That would be the one I'd buy today.
Absolutely. I think you summed that up pretty well.
See, I told you we leave the best for last, didn't we?
We did, and I love the way that he said it's done all the hard work.
I do. I'd like that. So, that's like what I do all the time. I make you look good because I'm doing all the hard work. But anyway, if you do want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. Now, moving on, let's now get into our hot stock tip for the week. Now, I'm going to give you this one to you again, Zoran. It's APE, isn't it?
Yes, Eagers Automotive Limited.
Now that's been in the news, hasn't it, today?
So it has. So this stock, there was actually some not so good news today in terms of the fundamentals and BYD business out of China and electric cars. So I would encourage you to go and do a little bit more research in regards to that. And as a result, we're actually seeing the stock actually come off today. But I'll focus on the big picture here. Right now, in terms of the technicals and the chart, it's actually looking pretty clean. So the levels around 1750 have been broken. The lows from July, August 2024, we can see a really, really steep and nice uptrend that's actually playing out. We've taken the all-time high back in April 2021, which is always a positive sign. We are seeing the price actually somewhat retrace over the past few months, and especially in the months of April. But the close, or the monthly close, is actually way above, or slightly above the actual all-time high. So it looks like the previous resistance is becoming a support right now, and that's really, really positive. I would like this stock to obviously hold around these levels. If it can't, then I would expect it to drop within the range of $14.50 to $15. But if it can stay here and start to actually reverse and continue going upwards, then there could be a lot more upside on the stock, and we could be looking at levels between $23 and $25, which is a premium around 25% on the current price.
Now, we haven't seen the close of today or anything else, so we're sort of speculating a little bit. So basically, if I can read between the lines, you're saying watch it at the moment to see how the market's reacting to the news today, because if APE have lost the ability to have their sole importing of BYD cars from China, then we've got to see how the market reacts to that, how far it drives it down. If it doesn't drive it down by much, then there's huge opportunity for the upside.
Correct.
But if it drives it down a lot further, what should people be doing? If they're in it at the moment, Janine, what do they do?
Make sure you've got a good stop loss and that you're ready with your rules to exit if it did trigger, but I wouldn't panic at this point.
Okay, if they're not in it, what do they do? Sorry?
Looking how the fundamentals are going to play out in terms of how it's going to affect the overall business, and obviously looking at the balance sheet, cash flow, EPS, PE ratios, and then seeing whether the stock actually can attract some buyers and whether it's going to hold well over the next few weeks. If it can hold well and it can start going above $18 to $19 level mark, then it could provide some great opportunity to get in.
So this could be a good stock to buy in the dip.
Yes.
Basically.
I don't think it's a good buy right now. If you are holding, as Janine said, you've got to have like hard and fast rules around it, but it could provide a good opportunity, yes.
Great advice from our two experts here. Now, that is it for our weekly hot stock tip. Now is the time to talk all things market trending this week. Now, I'm going to go back to you, Janine.
Thank you for that. Investors should be excited about the RBA's latest cut, because forecasts for 2 and 3 more this year are coming ahead.
2 and 3 more?
Yeah.
Wow.
Yes.
Didn't you know that?
No, I've been in the dark.
Are you in the late?
I haven't watched the news for weeks.
Obviously, you don't have a mortgage.
Sorry, I'm retired down in the sunny.
There might be 3 or 4. Who knows? But I think
I don't think we'll get 4 though. But yeah.
Well, I suppose if we're having rate cuts, then everybody wins, maybe except the banks. I don't know.
No, but not everybody's a winner, and that's really my point. So cash returns fall to zero as RBA slashes interest rates. So these are real returns are falling to zero. So after inflation is taken into account. Right, are going to get worse for Aussie savers already on their knees after the Reserve Bank's decision to cut interest rates. The real return for savers is already less than 1%. Any further cuts push it closer to zero.
So, does that mean you should be buying shares
Exactly.
instead of putting money in cash?
Yes.
Term deposits, other stuff like that.
You're not getting enough value for your money. You've got to look for the opportunities, right?
You're still going to struggle with that term deposit for that same reason.
Okay, so there you have it from Janine. So don't think about cash products at the moment. Obviously, bank accounts and obviously term deposits, or even probably bonds.
Well, we're going to see the shift anyway. Yeah. This is what will drive, part of what will drive the next boom once the interest rate cycle really kicks in.
So obviously that interest rate's dropping, as you guys are saying, 2, 3 more times this year. So that will push more money into the stock market. That's what you're saying.
Probably property as well, to be honest.
Well, they are expecting property to go as well.
Yeah.
Well, we've never seen so many increases in a row in the whole history of the RBA making those decisions. So it's like an elastic band. Some of it's got to come back a bit, doesn't it?
All right. Anyway, well, before we get into an exciting investment opportunity paying good dividends, when the real return drops to near zero, what actually happens, Janine?
Well, look, what happens is that people are really, spinning their wheels. That's the thing. You're not actually making anything.
Because it's going to hit the elderly, the retirees who put more money in cash, don't they? It's going to hit them a lot more harder, isn't it?
Well, it is hitting them because they're the ones that actually, are relying on that from week to week. The ones that are self-funded are relying on that money to pay their bills, to survive. So they're going to have to look to do something. And
so what about somebody with a mortgage? Obviously, interest rates coming down, their mortgage rates are coming down. What
clear winner, then it frees up cash to either pay off extra. And look, they advise you to keep paying that extra bit of money off your mortgage if you can. If you're not on a fixed rate, well, you bug it, aren't you? Because you don't get any benefit out of this. But there's a lot of people in Australia that are on variable. Very different to the US, which they're mostly fixed rates.
I was speaking to a guy Thursday, I think it was. He's a teacher. He was inquiring about our courses and he was struggling. He said, I'm struggling to meet my mortgage repayment.
Well, it helps new people looking for property because all of a sudden what they can afford has actually changed it. Before we move on, I'd like to talk about this exciting dividend opportunity. Now, you can see on your chart there, I've got a picture of property trust. This is the XPJ, so this is our index for the property sector on our market. And it's been lagging, hasn't it, compared to a lot of other indices on our market. But more recently, we've seen a bit of a burst out. This is the high in September 2024. It's broken through that high in January 2022. So what I've done is I've actually overlaid a stock which came up in a discussion. Macquarie had actually put forward a number of REITs because REITs are obviously still paying dividends. They've got more stable earnings generally. With interest rates being cut, that actually reduces their risk from a borrowing point of view, but also gives potential upside to the share price as well. I don't think that they're the sort of stocks that are going to punch the lights out. I just think that they're
they're good, stable ones to put a foundation on your portfolio, aren't they?
Yeah, exactly. And look, we haven't, I don't think we've seen all the growth that we're going to get out of this space just yet. If you look at what's happened in the property space, if I just draw a line all the way through here and I hide the stock that I've got there for the minute, you can see, hang on, I'll just bring that back again. You can see that the horizontal line, that basically this sector's been going sideways for all that time, well prior to COVID and then well after. But now we've actually seen something really different. We've seen this rise up, a real retest of that sideways move, which is classic of what we see before it pushes off. And we're starting to see signs of a move back up again. We're not there yet, but I think it looks really promising. And we saw Stockland earlier, which Zoran had a look at for us. There's some really good stocks in that space. Goodman is another one, which I had on the chart before. The National Storage REIT is just setting up in this really nice consolidation. It's a bit more volatile in nature. And you can see there that it's actually found support just recently. And I haven't got a bar chart for you, just a line chart at the moment. But if this thing takes off, it could go back through the high. We're not comparing the height of the chart on the overall index because it's not exactly comparable, but it's just giving you an indication of when this sector makes lows relative to the stock and whether it's tracking to what the sector's doing overall with the major moves, which it is. So that's sort of matching up and marrying with what my thinking is for the next move up. That's the National Storage REIT, but Goodman's another one which is also interesting. This is for growth though. I know we're talking about dividends. You've got stocks like GPT, which is great, Stockland, Dexus, Mirvac, all of these stocks in that space. You've got to look at for their own merit, look at their dividends.
And now's the time to look at it.
Now's the time to be looking at these, definitely. And then have a look at Goodman. It's retraced quite a bit off its high. It looks like it's just settling in. So it's just about deciding whether, at the moment, whether they're paying high enough dividends to satisfy what your portfolio criteria are.
Cool, thanks Janine, and moving on, let's get into some more stocks and answering your questions. Now Vineet writes, I've been holding Zip shares for a long time. The share price went up to $3, but now is trading at $2. So should I still hold it? Now I love this stock right now.
You don't love it more than me, mate.
I can't love it more than Zoran.
No, you don't. It's generally one of my favourite stocks. Actually.
Well, I'll let you talk about it.
Hasn't been on the way down, and I've got to admit, I've had some bad investment decisions with regards to that when he was obviously topping up. But overall, right now, I think it's actually a really, really good looking stock. I think fundamentally they're looking really good as well. They cleared a lot of bad debt. They're focusing on the regions globally that are predominantly positive cash flow, so they're making quite a bit of money. I think it's reflecting in the share price as well. On monthly chart, I think it's looking really good from a point of view that it's actually retraced. And it retraced probably a little bit deeper than what I was actually anticipating, but it's actually hasn't gone below $1 mark, right? That's actually really positive. And over the past few weeks, we're actually seeing the stock actually coming back up. I still feel that we need to see the price of this stock actually to go above $2.18. If we see that, then we could be, finishing our downtrend and actually starting a new uptrend. The volume has actually been quite significant as well, which is supporting a lot of buying at the moment as well. And I genuinely believe it's a $5 to $7 stock. Now, it might not happen right now. It might take quite a bit of time, but the management and the board have actually done some great stuff at the moment to consolidate the business, to focus on the regions that are doing quite well, and I think it's going to reflect in the share price as well.
I think it is too. I mean, I've been looking at this for a little while, and thinking it's just about ready to take off, and it did. Now I know there's some changes in the government's made some changes in the buy now pay later space that come in the next month, which is making it a little bit more regulation rather than the Wild West. So I think that'll benefit a stock like this as well.
That's probably the only downside, and it's a good point. The whole market is actually unregulated at the moment. But I think if they put some regulation in there as well, and if you're using the app as well, it's actually really good. It's really good, and we all know what happened with Afterpay as well in the past.
Yeah.
So,
well, they're going to be coming under the credit license now, which they've never had to do before. So it's all going to be tightening up, which means new competition is going to be harder to come on into the space, and some of those smaller players that may be taking some of their business might disappear. But anyway, next email that we have, now we're going to move on to one from Brian, who writes, what do you do with HGO? He goes, I bought it at 8 cents, now it's at 3.5 cents. I'm new to ad investing and have been enjoying your weekly videos. Just got the book as well, so at the moment investing is for learning. Now I'm going to give in to you, Janine, because you're kinder than I am if I had to answer that.
Okay, so look, we all have to learn, start somewhere. That's the thing. And, this is a stock which is a learning experience for you. Obviously, you don't want to be in the stock now.
It's a costly learning experience.
But you are in the stock, and it's great that you've actually emailed us to talk about it. So first thing to think about is what are you going to do differently next time, and be really clear about how you might manage a stock if you bought it. But at the moment, it all is not completely lost. You've got to weigh up how much you're down, obviously. And you've got to think about, well, how much more do I want to risk if I continue to hold the stock? It could very well bounce off this level and move up, but we have seen lots of stocks that go south and continue to fall. Okay, if you look at the history of this one, it is trading at all-time lows. It can always go lower. Don't think that
He's effectively done what Zoran said people do. He bought it at 8 cents, which is near the top of your line, which is 10.
Yeah.
So he's bought it near the top, and now it's fallen over 50% in price.
Yep. Now, the question is, it's not, he knows that he's done the wrong thing. The thing is not to, drive the stake too far in.
That's why I'm giving it to you.
The thing here is to say, okay, learn from the mistake, because nobody's perfect. We all do this, and it's part of your learning. It's only going to make you a better trader down the track.
So you're telling him to hold?
I'm saying decide how much you want to risk.
Well, he's already done that.
Yep. Have a look at the stock and decide. Because, look, there's a possible trend line.
You've got to help him though, Janine. What is he supposed to do?
What you're supposed to do here is look at this trend line. The stock must get back above that line. If it trades below the low of April 2025, the risk then is that it's going to come down and test this low, and then there's a high probability for it to go
you're
lower.
telling him to get out if it goes below there?
I'm saying make your own decision, but I'm telling you that you've got to draw the line in the sand.
Okay.
This is one of those things that you make your bed, you lie in it, you've got to make your own decision. I'm just giving you information.
Okay. All right.
Look, I do respect you obviously bringing this stock up, because I've seen over the years, and I've started the same way before I actually undergone the diploma course. You want to go into speculative stocks, and you want to be the guy that actually wants to go in a pub and say, hey, I made 1,000% on a stock. And this is probably a great learning experience, and I really appreciate you actually bringing it up, because not many people would. But stock like this, you have to be obviously prepared to risk quite a bit for a substantial gain, because now it's within a range of 3 cents and 10 cents. 10 cents appear to provide quite a heavy resistance level on the stock. I'll be honest with you, unlike Janine, I don't think there's much further to go. So if you are holding at these levels, how much lower can you actually go? Not much, unless there is something that goes really wrong fundamentally. So you got to weigh your options, and hopefully this is the bottom, hopefully, because it has provided support in 2016 and 2020, and if it can start moving upwards or above 5 cents, then hopefully you can at least break even. And again, I'm saying hopefully, which shouldn't be.
Great advice there from Zoran and Janine there for Brian, so well done. But again, read the book. Follow what's in the book, and we'll turn all this thing around for you. So please do that and start looking at slightly better shares. But anyway, David is our next email, and he says, WiseTech Global has been on my radar for a few weeks now. It seems like a growing company, and would love to hear your thoughts on the potential of this one. Now, Zoran, I know you and Phil were talking about this stock yesterday on our market report, because it did a takeover in the US, is that correct?
Yeah, there was I think $2 billion takeover of another business in the US, which is obviously positive, right? Mergers and acquisitions, what Janine mentioned previously. The stock is I actually like this stock. I think it's really cool. From 2020 lows, it's been trending upwards and creating, higher highs and higher lows consistently. It extended its trend at some point and reached as high as $140. Now the stock has actually come off quite a bit. However, in saying that, it's obviously the uptrend, the trend has been actually quite good in terms of the actual momentum line. It's retraced quite a bit, around 50%. And what me and Phil were saying yesterday is, the stock is looking good. It's coming back up again. It could go and test the all-time high. But one thing that investors or traders need to consider when looking at stock like this, when there is a hefty or juicy takeover bid, you got to have a look at some sort of fundamental stuff as well, like your balance sheet, cash flows, and things like that can impact the share price as well. Because there could be some sort of corporate action, capital raising, to back this deal, and as a result, in the short interim, we could see the price actually come off. Okay. So that's something to kind of keep an eye out on, and potentially a red flag. But overall, the stock is looking really good. As long as it can actually continue going above $100 as well, I think we might see more upside on it.
Perfect. Well, David's not in this stock basically from your email, so I think that was great advice from Zoran. He just said, have a look at the fundamentals, wait a little bit before you do get into it, but there's good looking upside then if it can hold where it is right now. But next is Ed's email. He says, I've been watching for almost a year now, and I would love to hear your take on IPD Group. I've been buying a little at the lows between 330 and 370, and will most likely top up if we see a breakout. To me, the chart looks like it's setting up for a nice run. So firstly, thanks for watching our show for over a year, but I'll go to you, Janine.
Well, look, we really appreciate your support, so thank you for that, and thank you for writing in. I'd just like to say that this is a classic case of what people would do before they do our courses.
Correct.
Is trying to buy at these bottoms without any confirmation and that catch a falling knife that Zoran was talking about before. This is a classic case of that. Is, you know, all you have to think about is waiting for that bounce. So what happens after these lows? Short sellers, you have to think about that psychology in the market. And I think that people underestimate the benefit of that. Like even in the Trading Mentor course that we talk about, understanding how the market moves and really appreciating that. When the market is selling a stock and the big money is selling it, which is what happens when, you know, a share like this is going down, why would you be buying it? You know, that's the thing. Yes, okay, Zoran was saying before, some smart money had come in and they've bought up the nice big quality stocks that pay good dividends, have a history of, you know, good earnings and all of that. They're trying to buy it. Even though we don't subscribe to that, it's a lower risk than trying to pick a stock like this, off its bottom.
I've seen, so like over the last couple of weeks when I've been ringing these people, I've spoken to a full-time trader who was inquiring about our course. I said, why are you ringing us if you're a full-time trader? He goes, I can't sell. I got no idea how to sell. And I said, well, how much does that cost you? He goes, lots. So I said, we'll fix that. I've had people like this buying little stocks when they hit little levels and dollar cost averaging. And I'm saying, how are you going with your portfolio? I sort of make some, but then I lose some and I'm not doing really, really well. And it's common what we're seeing.
When we see a bounce like we've seen off the market, the bottom, what happens is people could make 20, 30, 40% in some stocks off that bounce, right? But then they've got to know how to get out of it. And then you see these sort of retracements of these moves happening. Or when it really counts, say a year, 2 years, 3 years down the track when the market reverses and then people, like what happened in the GFC, people were trying to buy off the lows. The market moved up and then it got sold down big time and everything went down. So that's sort of a behaviour that's setting him up for the future if he doesn't correct it.
So Zoran, are you buying this stock right now?
No, absolutely not. This looks like Woodside and Woolworths. Younger sister or brother.
So you're saying he could get caught in a falling knife?
Absolutely, yes. And just going back on your point where you mentioned previously, Janine, bullish markets will hide all the weaknesses of traders.
Very good point.
You know what I mean? Like and this is what I see, like, you know, on day-to-day basis when I'm actually dealing with FX traders, commodity traders, equity traders, etc. People over the last few years, especially once cryptos actually come, I'm going a little bit off topic, but just an important point to raise because I've seen with cryptos as well, a new generation coming into the market, all they've seen is actually up, and up. But at some point, it's not going to be like that. Market will reverse. And that's where you will get fully exposed if you don't have the knowledge how to trade the financial markets. Because when things are going consistently up and they're retracing, you know, a little pullbacks of 5%, that's all fine. But when you're having a sideways market, which is what we had at some point in 2015, 16, when I was working for you guys as well, and I've seen, you know, 2008, 2007 global financial crisis, that's the point. That's why you're learning this now, so you can protect yourself against that downside.
Yeah, so this is the greatest learning time.
The next crash is coming right now.
Yeah, but there were obviously some simple rules that he could have waited for. Even your book told the trend line story.
I had a guy on the phone just in the last few days. I keep saying that, but he just said, your education is going to cost you one way or another. And I went, I couldn't have said it better. I said, so that's why you're ringing to do our course? He goes, yes. So anyway, Truman now writes, actually I spoke to Truman the other day, but he's writing, looking to get your thoughts on Reece Plumbing as a recent weekly entry was triggered. The stock has bounced from a strong support line on the monthly chart. However, it is in a long-term downtrend. The recent fall from the all-time high to today does align with a similar time duration fall on the monthly chart from the previous all-time high in January 2022, which could indicate a change in market structure. I've missed the recent weekly entry at 1660, but looking to buy if another buy signal triggers with confirmation. Now, you were shaking your head, Zoran. What's going on?
Yeah, it's giving me anxiety, this stock, to be honest, just looking at it. But let's have a look at it on monthly chart.
Yep. So you're not agreeing with Truman?
Unfortunately, not on this occasion, mate. Like I'll have to say no. Look, the last level of...
Wasn't this one of Phil's hot stock tips?
Don't. That's not very nice. He's not on the show and he's not here to protect himself.
Yeah.
So let Zoran keep going. Zoran's trying to be diplomatic here, Janine.
Yeah. I mean, look, the last line of defense that I see on this stock is actually around $13.30. Yep. I think it's provided a really, really good support back in 2022 until 2023. I also think, whilst not at that exact level, it's provided a little bit of resistance as well back in 2018-19. I generally feel this is a falling knife. I really, if I'm focusing on the short-term bar analysis as well, I'm looking at this monthly chart and it looks like that reversal is actually coming into an effect. I'd be very concerned if this stock actually broke through $13.30. I think that would be, something for you to worry about if you're actually in it. And next level that I see is probably around $10. Right now, I can't see anything positive about it. I'd love to see, what's going on fundamentally within the business, because it looks like the stock has actually done something that you would learn in the course if you have done it or if you will do it, double top, and that's generally considered as a reversal pattern, and that's why we're actually seeing a drop of 55%. So
he put a buy at 1660 on a weekly chart that he missed. So,
he missed it.
Yeah, he said he missed it. So
that's really good.
So, it is good that he's missed it.
That is good that you missed it, because I would probably look. I'm not here to give you personal advice, but all I can say right now is that the stock is looking actually fairly bearish. It's done a counter move on weekly chart, but it looks like the momentum is down and it's actually coming off. Okay. Now, the level that I'd be watching is that low of $13.38. And this low here of $12.93. So these are the major red flags, mate.
Okay.
Like that's what you have to watch. If it does reverse though, and you are looking, you're keen to enter it, then the highs of 1759, that's the recent peak. Move above that might start a new uptrend. But again, I would actually trade this with cautious approach, and I would ensure that my rules to get out are quite tight.
Cool.
Quite tight, because it will give you another entry at some point in the future.
Yep.
But if your stop out levels, risk and money management is not good right now, it could cause you a whole heap of trouble.
There you go, Truman. That's the wise words from Zoran. So again, I enjoyed chatting with you the other day, but I'd heed Zoran's advice. Now, next is an email from Matthew. He says, thanks for the show. I'm really enjoying it and have found Dale's book very helpful as a newcomer to the stock market. I've recently started building a portfolio, purchasing shares to hold using funds from my superannuation. My strategy is to invest only in the top 200 ASX companies with the main objective of long-term holding rather than trading. My first purchase was in CSL. I've noticed that it is currently near its resistance level of approximately $245. So is CSL a suitable long-term holding and growth stock for many years to come? Janine.
Look, this is a great stock.
I'm supposed to congratulate him for buying my book.
Oh, well, look, I think Dale just did that for you. Well done. I'll congratulate you when you put it into practice. How's that?
Good.
So, firstly, CSL. Top 20 stock, great company, but it's been in a sideways move for so many years, and it's not showing the signs just yet that it's going to start to move back up. We've talked about this on a previous show, that because of this sideways move, we could only really suggest it for short-term trading at this point, because short to medium term maybe, but there's potential upside if it were to come back up and test those highs again. But clearly, it's just taken out this low here in October 2023. So that long-term downtrend and sideways trend is still in play. So therefore, buying for the long term, would you buy now? We believe that the market's going to make a high in the next 2 to 3 years. So if it makes this high, is this good for a long-term play? I think it's too early to tell that.
But you're going to need to follow the rules in the book. That's the big thing, because
exactly.
you will get caught in the crash if you don't, if you're long-term holding. Obviously, traders hold different ball game. Anything else you want to add on to
At least if they're using the rules in the book, which, we can't apply that line just yet. But if they do that, at least they'll be able to protect themselves, like you're saying, if it does go the other way.
Well, next is Ben's email. He says, I've been looking at RMS as it seems to be in a nice uptrend since October 2022. P ratio looks good, and I believe they are set to merge with Spartan Resources this year, making it a leading mid-tier gold producer. So could you have a look and tell me if I'm on the right track? Now, I'm going to go to you for this one, Zoran.
Yeah. I think he's done a great job on this stock, actually. Yeah, well done, mate.
It looks good, doesn't it?
Yeah, it looks good. It looks good. It's a gold stock, isn't it? Is that what was mentioned previously?
It's just, yeah.
Yeah, I personally think that gold has got a lot more upside to go. I think fundamentally in macro, there is actually a lot of reasons for that with all the global issues that are going on, so much money getting printed in the economy and, inflatable prices and stuff. And a lot of governments are actually accumulating a lot of gold at the moment. And we can see that actually gold bullions are going up through the roof. So gold stocks are probably likely to follow. I think you've done a great job with this one. It's broken through an all-time high, which was back in 2020. The lows from 2022 October 1 are still fully intact, and we can actually draw a beautiful uptrend or momentum line here. So I think there is probably a lot more upside. There is obviously tools that we can apply here to potentially project how much this stock could continue to go, but fundamentally and technically I think it's actually looking really good. The only other level that I would actually mark here, I think his name was Ben, wasn't it?
Correct.
Is $2.50. So obviously with an all-time high back in 2020, we could see price actually come back and retrace a little bit. But obviously there is a momentum line and support line that are actually protecting this stock from further downside, and we could see this stock actually continue to go up. So I think it's also refreshing to see that someone is actually picked a stock that's actually trending up, which is really good, because I've just been thinking we picked and we've gone through 14 to 15 charts, and half of these are stocks that are actually trending down in a bullish market. And to me, that just says one thing: either people are not educated enough, or people are actually trying to pick the bottoms.
Well, they do. They do.
And I've done it as well, and I'm sure we've all done it at some point in time. But
it's like, how cheap is the stock going to get?
Yeah.
Whereas you're better off buying with momentum and buying them as they're going up rather than when they're going
down.
Cool. Anyway, remember to send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now, if you want to watch more hot stock picks from us, check out our Smart Money is Buying These ASX Stocks video.